Hi, thanks so much for tuning in. You're watching BQ Prime, and this show gets you all the stocks that you need to know about in trade. We get you the fundamental analysis as well as whether or not it makes sense for you to take a fresh position, maybe, or hold on to positions that you've already taken. This is, of course, for the long term. Joining me now, Samir Dalal is my guest for the day. Samir, thanks as always for taking the time. And we have an interesting list of stocks that we want to talk about today. The first one, of course, is the most interesting, given the kind of move that we're seeing on Reliance Industries, up over 4% as I speak to you right now. And quite a few updates. One, of course, is the demerger and the listing of JFS, Geo Financial Services. And there's also the move to acquire a stake of the Reliance retail business that is currently being held by minority shareholders. What can you tell us about the implications of the first, though, the JFS update?
So I think JFS has been in the pipeline for the last 2+ months, right? Everyone's known about the fact that they wanted to demerge their financial services arm and list it and let it grow as an independent entity. So that's just a continuation of what is known in the market. The impact is only that now you know what the date is, the X date is. So whoever wants to have some shares in the Geo Financial Services can probably buy the Reliance shares right now to get the shares when the demerger happens. Now, as per what is in the public domain that is known, this is going to be something that is going to be a focus area for Reliance. And if you look at it, financial services is one space without which the entire Indian economy also can struggle to grow. So what they want to do is they want to get a share and a pie of that part of the business and grow it over a period of time. So I don't think it's I think it's a positive step from them. I don't think it's going to hurt in any which way, except for the fact that it's difficult to determine what's going to happen to those treasury stock that Reliance Jio will hold in Reliance Industries. Would it very well mean that this company probably for the next 5 years could grow their businesses, or 7 years grow their businesses without having to raise any capital by just selling off slowly and steadily the Reliance stock that they will hold in the treasury form? So that needs to be seen, and management will probably give some guidance on what the plan is with that. Or is it just going to continue to be holding it and then, everything, it's still very unclear what's going to happen. But yes, there is going to be value, and we need to see what it lists at and then take a call on how to take it forward.
Latest move, would I be right in assuming that it's a bit of enthusiasm at shareholders of Reliance Industries getting to hold another entity, a financial services entity with potential to grow from this point?
Oh, absolutely. That is enthusiasm, right? But let's look at the entire Reliance group. So Reliance actually has a lot of other listed entities which are there, which have been real underperformers compared to what Reliance Industries has delivered, right? You talk about his TV18 or Network 18, they've underperformed. You talk about Hathway Cables, you talk about they have a stake in SW Solar that's underperformed. They have a stake in Just Dalal that's really not performed. So apart from the Reliance main stock, I don't think we've seen too much performance in the rest of the pack of the Reliance listed entities. I mean, I may be missing a couple of names here, but if you look across the board, none of them have really performed, right? They've not really given any returns to shareholders. So there I'm sure there is enthusiasm because this is financial services, and financial services is something that can grow quite significantly given the kind of opportunity that lies ahead in the Indian markets. But like I said, that has already been known. I mean, today, shareholder Reliance, who was there about 3 months ago or 2 months ago when the original announcement happened, knew about this, and that doesn't change the dynamics. I think today's stock pop-up is more because of the buyback that they're doing in the Reliance retail arm, because they are probably doing it at a premium to what the market expectation was the fair value of Reliance retail. And that's what's driving the stock, because then the derived value of Reliance by itself should be higher.
That's an interesting take. I was actually going to ask, and that was kind of the direction where I was going. What is this pop on account of? And you were talking about Reliance Retail. The way that they're doing is through an NCLT process. They tried to do it once before, but not this way, and they were offering much less at that point, which is why I think there is some enthusiasm. But it's still much lower than what it's trading at, off the counter, or rather over the counter, right?
Yeah, so some of the deals have been happening at 1,500, 1,600 rupees on the unlisted market kind of space, right? So you're right about the fact that it is a little lower, but at the end of the day, when you look at Reliance and why the pop in Reliance has happened is analysts attribute a particular value when they do a sum of the parts valuation for Reliance Industries. And the valuation multiple being assigned to Reliance Retail was significantly lower than what they're doing the buyback at. The unlisted market not necessarily predicts, is the right curve to say that that is the fair price. A lot of deals happen at prices which are unreasonable and unjustifiable. I can give you a simple point. An example, API Holding at one time was selling at 100 rupees a share in the unlisted market. And I think now the latest valuation multiple, which they're going to be raising the next round of funding is going to be, I think, 1/100th of that. 100, I'm saying 1/10th of that. So about 9 or 10 bucks or something around that level. If what news we're getting is correct, but if that is the case, then that doesn't justify anything. So yes, the pop-up is because the SOTP valuation given to Reliance Retail was lower, and the analysts have had to up their target multiples target prices based on the new realized value, which they believe is now probably would be the fair attributed as the fair value.
Okay. From this point on, then, and this is the last question on Reliance Industries before we move on to the other stocks. We generally have tended to see a bit of a pop in the stock before the AGM because a lot of announcements are expected around that time of the year. But how do you see this current value in terms of a fresh entry, perhaps, or adding to your holding of Reliance Industries? Is this the right time to add, especially given there are a few reports that have come out that suggested that the first quarter at least will be muted?
Was going to get into that. I think the first quarter, not only that, but I think even the second quarter, I'm not expecting great numbers to come from the petchem business, right? When you have chemical prices trending lower, your margins are going to shrink in the petchem. So the core earnings of the company, which have been coming from the from the refining and petchem business, that is going to be a bit under pressure. So you're not going to expect anything phenomenal there. So that is one thing that is there. The second point which you're asking is, should I make an entry at this point of time? I don't think there is anything in the AGM that is going to be new because he's already got a lot on his plate. I'm not saying he's not capable of doing more things at one given point of time, but given his entire focus to the green energy, that's the hydrogen and the batteries and renewable sources of energy that he's working on, I don't think he's going to want to announce too much more, because then he's going to be spreading his capital too far. And at the end of the day, everyone has to look at return on capital and return on equity as a parameter for investing. And when you spread yourself too far and extend yourself too big, your return ratios fall, and that is something the market will look at negatively. So I don't see that as a problem. But yes, like I said, since the core earnings are going to take a bit of an impact in the near term, I wouldn't be too gung-ho on going into the stock right away. This pop-up might actually not be a bad idea to take some money off the table and wait for a correction. I'm not saying Reliance is going to fall in any significant way. It may fall by about 5, 7, 10%. But if there's a trader in the system, it doesn't hurt to take some money off the table and get back in 5, 10% lower. If you're a long-term investor in Reliance, I think stay put. Even if a correction comes of 10%, it doesn't really matter. Look, you're in for the long term, and over a longer period of time, Reliance is definitely going to be able to generate good returns given the kind of investments they're making, especially in the hydrogen and the green energy space. So I feel that once that starts kicking through, you'll see some value. Then eventually they will list Jio, the telecom business, which will give some more value, and the retail business will also at some point come up for listing. And when you look at that, and when you think that DMart is trading at about 90 times the earnings, and Reliance is much bigger when it comes to the entire gamut of the retail space, and even if they get 50% of that kind of valuation, I think there's upside potential. So would I be in a rush to buy? No. I think there are corrections along the way that are going to come. But yes, over the long next 3 to 4 years, I believe Reliance stock can generate good returns for an investor.
Okay. I'm glad we spent as much time as we did talking about Reliance, because it is arguably the stock of the day today. But let's quickly move on to the rest of the list as well. Indian Oil Corporation fundraising plan, 22,000 crore rupees, and a joint venture that has been announced, 18,000 crore rupees to be funneled into that. Battery swapping is what they're talking about. What, according to you, is the implication of the latest move? And also, how do you see the business? Another refiner, you're talking about the price of petrol that has not moved, but then crude is softer than it has been in the past. what's the business dynamic that you're focusing on?
So I'll just first say that how much ever time you spend talking on Reliance is never enough, because there's always too much, and it's one of the most important stocks when it comes to the Indian market, right? So let's say that we've done a fair share, but I mean, you can keep going on and on about that management and company. Now coming to IOC, so this is a stock which is looking to raise some equity, and that's great for IOC. I mean, from the company point of view, but as a shareholder of the company, I would be a little averse of buying into this company at this point. And this news flow doesn't really mean anything to me. I'll tell you two reasons why I would be a little averse. The first is that we're going into election season, and whenever that happens, what you will see is the government will try to cut some amount of retailing prices to ensure that the end customer, that is the vote bank, is happy that prices have come off and they're standing to benefit. So that pressure could definitely come into all your HPBP IOC. Now, refining business, as you also rightfully put, which is the second point I want to address, is going to be under some amount of pressure going forward, because the crude oil prices are coming down, and whenever the GRMs at the end of the day have to have some correlation with the crude oil prices. If the refining prices margins go up significantly, then that means there's an excessive demand, which will automatically pull crude oil prices up also. Given the fact that crude oil prices are not as high, it tells you that there's not enough demand in the system, and which is why the margins for refining are not going to be as great. So profitability to some extent can come under some pressure in the given quarter. I mean, this quarter, the retailing margins are going to be so phenomenal that will ensure that nothing really happens. But on the refining side, I think there is going to be some amount of pressure on margins. And lastly, at the end, I would say, because it's a PSU, even though valuations are in favor of all of these companies, the PSU stocks always continue to trade at a discount, and there's always pressure on them when it comes to election years, right? So from those point of views, I don't think it's the right time to be getting into IOC at this time. I think when the opportunity maybe 20-30% lower comes about, I think post the elections, we can probably consider it, but it's not one of the picks I would be looking at this point.
All right, let's quickly move on to Sula Vineyards then, and we've got a business update from this counter, or from the company rather, and it's quite a positive set of numbers that they've talked about. 17% growth in net revenue. The own brands have outperformed according to them. 24% growth in revenue there, over 100 crore. You have their visit that you have to their vineyards, which I think is also churning good revenue for them. I don't think that you have specific coverage on this counter, but what would you say about Sula Vineyards and maybe about the broader space as well?
Right, I don't have coverage on Sula Vineyards, but let's put Sula into perspective in the fact that in India, wine as a category is still very, very underpenetrated. I think whiskeys, vodkas, gins, those are more. And forget just these alcohols I was talking about. There's still the local bars. I mean, those desi daru, where still there's a huge amount of market share which has capability, and which can eventually come into the more organized kind of alcohol space. Plus, as the wine culture in India keeps increasing, which is something that's beginning to see green shoots of, Sula would definitely be a benefactor because of the pricing points that they sell at versus what the imported wines sell at. Now, I'm not a wine connoisseur, but I do speak to a few of them who are, and they tell me the Sula wines are not in any close standard to what some of the imported Italians or the French wines or even for that matter the Australian wines are. But given the fact that they are at the lower price point, there will always be a taker for these kind of products. So the base, as it expands, you will see Sula being able to capture the lower end of the base and grow its business. And you can very clearly see that in their numbers as you see the growth, right? So that is one positive. The second thing that we talked about is the wine awareness that they're trying to create through their stays at their location. It's a very small percentage of the revenue, and the ROCs and ROEs for that business may not be as great, but it definitely helps expand the market and create brand awareness around Sula. So that adds on. I will not say that is a game changer, but I think that adds on. But yes, like I said, in the entire space that is there, valuations of United Breweries, United Spirits are much higher than that of Sula. I mean, of course, you can't compare the two because they're two completely separate businesses. Three separate businesses. One is beers, one is hard liquor, and the third is wine. But if there's some rationality that goes in between the valuation multiple attributed to alcohol companies, I think Sula has maybe a little space, and given the growth opportunity which we discussed, there could be. But at this point of time, in the entire space, I'm choosing to avoid it given the high valuation multiples that exist.
Makes sense. Also, to the point where you were mentioning it's going to cater to the lower end of the spectrum. Interestingly, they are catering to the Indian palate as well, which prefers a slightly sweeter wine, from what I have found out in my conversations. But like you've said, perhaps valuation's a little stretched. Aurobindo Pharma is the next counter that I want to focus on, and their unit has inked an exclusive licensing agreement with a US-based company to sell a biosimilar. As I understand it, Samir, quite a significant market that this particular drug caters to, right? But their share of this particular formulation is not very large, or what they currently earn is not very large. How would you understand this?
We haven't gone into great details when it comes to this one particular drug that you're talking of. So what I can tell you more so is about what Aurobindo Pharma business model and what the valuations and what I think of the overall business. This one particular drug may change a bit of the dynamics, no doubt. But no one medicine changes the fortunes of a company to that extent, which is already catering to so many of them. So the big problem that Aurobindo Pharma has been facing over the last few years, and which is why the stock, if you look at it over the last 5 years, has given no real returns, right? If I go back 5 years, and the entire pharma space for that matter, is because of the change in certain dynamics that have happened in the United States, which is the big market for all Indian pharma companies. That is the consolidation of the end retailers in the United States, right? So from being 5 or 6 big players, now we are down to 3 big players, and of course, you have the smaller ones, but the 3 big players, which in the US, they don't sell medicine under the name, okay, this is an Aurobindo brand. They sell it under a generic. So this is a medicine for flu. Now, who sells that medicine of flu to the end retailer is determined by the price you as a pharma company are willing to offer, and a basket of products that you're willing to offer. Now, where some of the likes of Aurobindo, Sun, Lupin, Dr. Reddy stand out is the kind of number of chemicals that they have in their portfolio, which they are able to offer, which allows them to probably garner some more market share compared to the smaller players. Where Aurobindo has that one strength. And of course, like you rightfully said, they've now gotten to, this biosimilar space, which will obviously open up a lot more avenues. But having said that, like I said, that is just one drug. But the bigger problem they've also had over a period of time has been the fact that whenever US FDA comes down, Aurobindo has constantly faced some amount of, not warnings, but they've got some amount of point outs that the US FDA has said that this is not correct, that is not correct, and which delays certain drugs from being launched in the US, and which is why growth has not been as strong as we would like it to be. So until they are able to resolve this other problem which they have internally, when it comes to US FDA, I think there is always going to be some pressure on the market margins. Now, this new deal that they've done for this biosimilar, like I said, I haven't studied it, or I'm not totally clued in on this part, will definitely add. But then again, for all those clearances to come through, again, they have to go through the US FDA checking. And when that happens, if some problem comes up, again, it can delay. So Aurobindo, as good as a company as it is, and as many amazing things that they've got in their product portfolio, till they solve all of the other problems that they face with US FDA, I think the stock is going to just zigzag in this kind of a range without any major uptick. So again, there are other stocks like Sun Pharma who in the large space who are doing extremely well, who are trying to differentiate themselves, not just work on generic kind of medicines. Who will be able to do a lot better. So if I had to take a pick in the space of pharma, Sun Pharma would be something I would definitely focus on. Then there are some companies who are doing specialty medicine like Natverlal, which are working towards the cancer side, which have huge opportunities. So that's something I would look at. Also in the mid-cap space, Torrent Pharma has been doing extremely well. They haven't had as many problems when it comes to the US FDA. That is a company I feel that could do well over time. But again, valuations on Torrent Pharma are a little bit higher. So corrections might be the right time to buy into them. But these are the three that I prefer over Aurobindo Pharma.
Okay, fair point. The last stock that we're focusing on today, and I think it's been spoken about quite a bit over the last few trading sessions, Bajaj Auto. And this is an account of triumphs. The latest update, of course, is that they have received 10,000 bookings for the Triumph motorcycles. An increase, substantial increase, Samir, in the production of these high-value motorcycles would change the mix, so to speak, for this counter or for this company, which has thrived in the mid-market segment, which again they had to pivot on. How do you think that this will change the dynamic for Bajaj Auto? Because the exports have been a bit of a pain point in the recent months when you look at the volume mix.
So that's what I was going to lead with. Yes, they have got 10,000 orders, but 10,000 orders is a very small number when it comes to the kind of sales that Bajaj Auto does. And Bajaj Auto not only has domestic, but a huge export market where they provide bikes to 27 or 28 countries. I could have that number a little off, but yes, it's a huge number, well above 25 plus, right? So unless we see a rebound there, that also would be a bit of a concern. But overall, what it will do to the earnings profile. Now, the question we have to ask ourselves is when you sell 10,000 bikes versus what you're selling about a lakh plus bikes a month, how is that going to, that higher EBITDA margin will definitely come in through these Triumph bikes. But what percentage of that is going to be a part of your overall EBITDA margin? It's going to be a smaller percentage. So you will see margin expansion, but it's not going to be that significant. I think what happens is whenever something new like this gets launched, the excitement around it is a lot more than what actually comes through in the numbers and in the valuations should be justifiable. Secondly, what you got to look at is since it's a new bike, there have been a lot of orders, a lot of a lot of people want it. But at the end of the day, you also have a Harley, you also have Eicher, which is there in the system. Eicher is not going to want to give up its volumes. They are going to compete. They're going to take whatever steps required to ensure that they are able to grow their business as well. So this one thing one swallow does not make a summer, right? And this is the kind of situation I believe that the market is kind of ignoring. They're looking at this one Triumph bike as going to be the game changer for them, which is going to drive Bajaj Auto into a new league. Going to make them extremely and much more profitable. I'm not saying they're not profitable, they're very profitable and it's going to take them to another level. But I think we also need to focus on something else which the market has chosen to ignore. And Bajaj is their electric two-wheeler, the Chetak two-wheeler electric, which has just been launched. I think that probably will be something that could be a game changer because at the end of the day, electric bikes, which are the mass market bikes, which will become Chetak, which will become a mass market bike, will be something that should drive profitability a lot more and give them operating leverages peeking through. So overall, it's a great thing because they're launching new bikes, sales will increase, margins profile will improve a bit, but the market is factoring too much too early. I think that's all. Beyond that, I love Bajaj Auto. I would not sell it. I stay invested. They keep giving out good, healthy dividends. They did a buyback recently. They're a cash-rich company, and they should be able to take care of any turbulent times. And eventually, as the export market picks up, I think Bajaj Auto will again be a benefactor there. So, small dips, even now, I would say no problem buying into the stock. Yes, valuations are high, but this is a company that probably has a huge amount of growth lying ahead of it for the next 5-7 years. So, I would stay invested and wait for small, minor corrections to buy into it. I like the company, but yes, is this going to change the dynamics? No.
Okay, fantastic. And perhaps, anyway, we're completely out of time. I would have asked you about Eicher after that 10% fall, whether it's a fresh buy, but then we'll hold that for the next chat. Thank you so much, Samir, for taking the time, for speaking to BQ Prime.
Thank you very much.
All right, viewers, there you have it. A lot of stocks were discussed today, and beyond just the stock list that we had, Samir gave you a few recommendations as well. Let us know what you think in the comment section and do share. Do stay tuned. Lots more coming up over the course of the day. This is BQ Prime.